Welcome to the What's Your Deal podcast, where we discuss business acquisitions, investments, management, and exit strategies. I'm your host, Matt Euler. Let's dive in. Welcome to What's Your Deal podcast. I'm here with Lindsay Denton, a special guest. Lindsay and I have been working together for 7 years coming up. And Lindsay is a transaction director with WCI Business Brokers here in Northern Arizona. Welcome.
Thank you.
Yeah. So can you share a little bit with us about what you do as a transaction director at WCI Business Brokers?
Absolutely. So many buyers and sellers have never gone through the financing process. So I assist them with all of the steps through obtaining acquisition financing.
Yeah, and so what that looks like for our guests is financing a piece of real estate is one thing, right? Because typically the weight is on the buyer's ability to afford the piece of property they're buying.
Yes.
When somebody's financing a business, the weight is to a large extent on the business and its ability to pay for itself.
Absolutely.
And so it's a whole different dynamic, which is why you have so much fun in your chosen profession.
That's correct.
Yeah. So from the beginning, what does it look like? You end up with a deal, or one of the WCI agents ends up with a deal, and that buyer needs help with financing. So how do you start the process with a buyer?
Well, first I start with connecting with the buyer and gathering some fact-finding information, all of their history, unpacking their baggage, if you will, and determining where their financial position sits, and then work our way through step-by-step what needs to be handled.
Yeah, and I should mention, before they get to you, the buyer's already been pre-qualified, so to speak, by the broker or the agent involved, because otherwise we shouldn't even be going down this road.
Correct.
So you have a pretty good feeling about the buyer's qualifications up front, but as you refer to with baggage, most people have some of some kind.
Absolutely.
And I think your job is partially to find that before the lender does, right? So that
Correct.
we can package it correctly and deal with anything that's coming up before that. Okay.
Correct.
So then next step, you're going through their luggage and their closets and finding out what they're made of, and then what do you do?
So typically we have the seller's information already on file, and then we're going to work through all of the buyer's information to prepare a business plan, projections, their application, as well as their financials, and package that up, clean everything up, and get it ready for submission to the lender.
Okay. And is there always one lender or sometimes more lenders? How do you choose lenders? And ultimately it's the borrower's decision, right?
Correct.
But what's your role in that?
So it is the borrower's decision. However, we try not to recreate the wheel. So when we start with a buyer, we give them the option if they're already working with a lender, or if they have a lender of choice, and then of course give them recommendations of lenders that we've had success with, and work our way oftentimes side by side for two lenders. And then when we do receive a commitment letter, then obviously run with that with the buyer.
Okay.
And work our way through that process. Yeah.
So roughly 70% of the transactions that WCI Business Brokers put together are financed. So
Correct.
The financing piece is huge. And when I talk with sellers sometimes about this fact and this statistic, the reality is if the business is not financeable, then typically we're losing 70% of the buyer pool.
Correct.
So for a business owner, it's super important that they ideally design their business to be sold and strategize accordingly so that it can be financed, and it opens up the pool of prospective buyers to be able to obtain financing.
Correct.
So most of the financing that's available for cash flow business acquisition deals is small business administration, government-backed loans.
Correct.
And there are lots of those lenders.
That's correct.
every corner, right? But there are very few, and I'm going to say in the state of Arizona, let's say there's a handful that specialize in the types of deals that you're working with every day. So can you share with us a little bit the differences between different lenders and different types of SBA lenders, and even the interests of those lenders?
Sure. So there are two different types of lenders from a SBA standpoint. There is what's called a GP lender and a PLP lender. A GP lender is one that can originate a loan. However, they don't make the final decision. That's going to have to go through the SBA. Those can take a lot more time. They don't have the authorization to approve that loan themselves.
So the types of loans that finance these types of transactions, which are business acquisition loans, and most often cash flow loans, right?
Yes.
The transaction is funded based on the business's ability to pay for itself.
Correct.
So small business administration lenders are all over, lots of them. But I would say that there's a handful, at least in the state of Arizona, that I'm aware of that specialize in business acquisition financing.
That's correct.
So can you describe the difference between the types of SBA lenders there are and the what makes one lender better or different than another lender when it comes to trying to finance the transactions that you do?
Sure. So there are two different types of lenders in the SBA pool. A GP lender, which is a general program lender, where they have the ability to originate the loan, but they do not have the ability to approve the loan. So that actually would need to be approved directly through the SBA and re-underwritten.
Okay.
Which can take a significant amount of time to process. The second type of lender, which is what we typically work with, is a PLP lender, and that is a preferred lender program. What that means is they have not only the ability to originate the loan, but they also have the ability to underwrite and approve the loan, which speeds up the process significantly for the borrower and for the transaction itself.
Well, and the other thing that's interesting about that, because I know we've done deals with GP lenders, is that the lender themselves, the bank, the lending institution, can be fine with the loan. But then you end up with a whole nother underwriting that has to happen where, and we've had this happen, where then the deal gets declined for some reason or there's some issue and we have to restructure the deal.
That's correct.
And so specifically as a broker, part of the challenge in that, and for the buyer as well, and we've seen this, is that you get to the place where the lender agrees to fund your deal. And you're trying to move forward with the transaction. And that can include meeting with staff and applying for licenses and even for a lot of our buyers, they need to quit their job. But then you end up with a week or two ideally before closing, and you're getting underwritten again and the whole deal can get tossed in the can.
That's correct.
So that's why I know we prefer PLP lenders. And the other thing that I think is unique about PLP lenders is it leaves it in their camp, right? Because a lot of lenders have different lending criteria and different appetites. Many, many years ago when I started, I completed and financed almost all of my transactions with one lender. And then all of a sudden, I've got decline. So up until that point, they liked all of my deals and the way we packaged them and the way we underwrote them ourselves. And it was literally just a transition in that lender's preference for credit risk. And they changed directions. Nobody told me. So we got decline. And then I switched to another lender, of course, and got them approved, every one of them. So selecting the lender is important. And
Absolutely.
Maybe you can share a quick story. I know the story, but I'd love to have you share it as well, and we can dialogue about it. But there are times where people will work with their own lender, and we obviously encourage them to work with a lender that we feel very confident will get to the finish line. So even though they can remain loyal to their lender, if there's a hiccup, we're able to start all over again. And so there's a story that I think you probably know which one I'm thinking about, but maybe you can share what happened in that process and in the time that lapsed.
Sure.
Because time in our world is very stressful for buyers and sellers. And the longer it goes, not only do you have the potential of losing the transaction, but it just weighs on people. I mean, there's sleepless nights, there's anxiety and stress. So would you mind sharing that story, just some of the details without names?
Sure.
Yeah.
We went under contract with a home improvement retail store. And buyer and seller both worked with a local credit union for their business banking.
And they were GP.
Both buyer and seller agreed that would be the best route to take. And they moved forward with that. After about 2 months, they were able to get what we thought was a conditional loan approval, moved forward, and nearly 4 months in, that lender came back to them and said that they were no longer approved. So not only did we have buyers and sellers anxious, we also had employment agreements that had been signed, lease agreements that had been signed, some life changes that the buyers and sellers had both made in light of the transaction. And at that point, we did have to start over with our lender. Thankfully, we had a majority of the information. So from that point forward, we were able to get that closed in 7 weeks from the time that we got the declination from their credit union to closing.
Yeah, and that brings up a great point, because as you're sharing that story, I'm remembering that the issue, there was a specific qualification issue, and it had to do with a contractor's license.
Correct.
And the GP lender was okay with that, or they didn't understand the SOP, the standard operating procedure from the SBA. So they approved the deal and literally told the borrower, you're approved. And then it went to the SBA, and the SBA declined it because of that condition or that SOP, and that was it. So fast forward to the lender that actually funded the deal, they had the discretion to interpret the SBA's SOP.
That's correct.
Based on the contractor's license requirement, and were able to approve the deal without a problem. So literally 6 months of time from the time we signed the contract to the time that it actually closed, 4 of that was wasted with a lender who wasn't able to do what they thought they could and promised everybody they could.
Correct.
And it was the SBA GP process that ended up kicking that out. So
that's correct.
So oftentimes I know we'll have buyers who are focused solely on rate, or it's a friendship or something, but what I've experienced isn't as valuable as I think those things are, is starting with a lender that can actually get to the finish line to the best of everybody's knowledge is far more important.
That's correct.
Just one quick other story that's a real current event. The transaction that we had where the buyer was working again with their lender that they had a relationship with, and the lender was not keeping up with the timeline necessary for the contract, and so that buyer actually went out and got a hard money loan for a significant amount of money to be able to keep the transaction under contract and close the transaction. So that cost that gentleman, I would say, the best part of $70,000 to $80,000 to obtain alternative bridge financing because of the lender they chose.
Absolutely.
So it's super, super important. So what are some of the mistakes that you see that we might be able to help people avoid? I mean, if somebody's even, let's just say they haven't even found a business they're looking for yet, but they're in the market. I mean, they want to own a business and they intend to own a business. What are some of the things they should be doing to be prepared for the financing process?
I would say certainly being upfront and clear with what their financial landscape looks like. And that means gathering all of their financials, knowing exactly what they have and where they have it, good, bad, and indifferent.
I'm chuckling because it sounds elementary.
This is true. But
some of the stories about what we've learned from what people have and where they have it is pretty entertaining, actually.
Yes. So being clear and concise on where your money is and where your debt is, and then being clear on relaying that information and not hiding anything, or being upfront and factual with that. In addition, making sure that they do have the reasonable liquidity that they need for the transaction before moving forward. And then once that application is put together, ensuring that they're not making any significant changes to their financial landscape, buying cars, selling cars, buying a house, those types of things. Yeah, well, it's again, we have so much color to this because of the number of transactions we've completed, but some of that would seem so simple. Part of the reason the liquidity part you're bringing up is so important is because we have to document that as somebody who's helping them to get the loan. Absolutely.
Now, the reality is we don't have to document that, they do. But if we can't document their flow of funds,
that's correct,
it's a problem. And we've discovered that many times. And when you shared just, being clear on your application, I had a transaction many years ago with a gentleman that I was helping to obtain financing. And there are questions on those applications that dive into people's criminal background. And oftentimes people will communicate with us about that, and we'll work through it, and we'll work through it with the lender. I mean, it is what it is, right? But we do need to follow the rules in order to comply. Well, this gentleman who completed this application did not follow the rules, and he marked no on that question. And so, of course, the lender ends up finding out that this gentleman had a drug dealing charge, which is pretty significant when it comes to credibility with a lender.
This is true.
So magically, we were able to work our way through that. We got some documentation about it, wrote up a story about what had actually happened, when and how, and submitted that to the lender. And the lender decided that they could live with that. It was okay. They got to the other side of that. And one of the things that happens, one of those questions requires that the SBA approve it as well. So we got to the other side of that issue, and then came up the second criminal violation that this gentleman had. And again, it shocks me to this day, but we actually got to the other side of both of those and still ended up getting the loan closed with the first lender in spite of those things. But a lot of lenders look at misinformation on an application as a credibility issue, as a character issue.
Absolutely.
Right? And they take it serious because even though that lender has the SBA guarantee backing them, they are the lender and they are making a credit decision that's important to them.
That's correct.
And so it's a great point. So as people are communicating with you, as somebody who assists through this process, or if they're doing this on their own, honest and upfront, and getting in front of any of those issues that may be in people's past, and they're usually there. I mean, it's amazing how many people have something they did as an 18-year-old or a 17-year-old or a 22, whatever.
That's correct.
That is on their record and they need to deal with. Well, there's one deal I can remember where it actually killed the deal. And that had to do with like an attempted murder thing. Pretty
No pun
significant.
intended.
Right. But drugs, alcohol, hunting at night with a flashlight, I mean, all those things, we've been able to get all those closed.
Well, and that's the importance of my role, unlike an underwriter where everything that the underwriter goes through, they're taking a fine-tooth comb. So I'm actually able to work through all of those baggage, if you will, with the buyer prior to it actually going to the lender. So we can make sure that we have all of the details, all of the information that we need on any of these situations, whether it's a bankruptcy, whether it's a criminal history, whatever that may be, before we package that up and put our best foot forward with the lender.
Yeah, it's super important. And I know this because I work with you every day, but I also know it because there are lots of times clients come to us because they were already declined for financing.
That's correct.
So they had the buyer. They decided they don't need a broker. They would go down this road on their own. And then they get declined, and then we're able to get them approved. And I can't honestly think out of literally hundreds of transactions where we weren't able to get one approved that we thought was approvable.
That's correct.
And so knowing how to package the deal is super important. And part of what this podcast series is about is helping people to learn what they don't know.
Correct.
Because in my life, what I have learned is the things I don't know are the things that always come back and get me, which is why education is so important. And especially in the world of buying a business, most people have never done it before. And obtaining financing for a business acquisition, most people have never done that before. So I personally believe the service you provide is a huge gift for most people, and that's also why you get so many positive reviews. There are times I'll go to a transaction where I've brokered the deal, and people want to know where Lindsay is. So your role gets very, very involved and super important for the success of the transaction getting to the other side. So
well, and that's what makes this so rewarding.
Yeah, no, I understand. It's in one of the other episodes I talked about how there have been people who literally didn't have the down payment funds for a transaction, and I helped them get into their first business, and now they're multimillionaires and own many, many businesses. And that's what we're able to help people do. And I think with proper coaching and counsel, they're prepared to own the business and then do it again and again and again. And so that is part of what's so much fun about our industry as opposed to some other industries that might do things different.
And in that circumstance, the couple that you're speaking of that started with not enough for a down payment, just having a conversation with them recently about helping them and one of their family members is fantastic as well, that they still know where the expertise lies. They're the expertise in their business and we are in ours.
Yeah. Well, and because I know you personally, I also know that you put your heart and soul into it. And that goes a long way because we are dealing with people's financial futures and in most cases, in a lot of cases, everything they've been able to accumulate up to that point. So it's no joke, for sure. So let me ask you this. What's the difference between the service you provide with WCI business brokers and a loan broker who might set somebody up with an SBA loan or help them through the process?
I would say that their assistance is probably not to the extent that ours is able to. Again, going back to sitting and having a conversation with the buyer, gaining their trust, and going through every piece of their financial landscape first. Whereas a loan broker typically would guide you to one of those lenders and not necessarily hold your hand, if you will, through the process. Another piece of that is once we have an approval for the loan, that's not where my role stops.
Great point.
Role goes all the way to the day of closing and even after closing with any of the post-closing items that are needed from the lender, or I should say from the buyer to the lender. And then, through the process, assisting the buyer with creating their entity, getting business insurance, getting life insurance, and whether they need any licenses, most of them do, at minimum a business license, and sometimes even all the way to a contractor's license or a third-party approval.
Yeah, it's a great point because we don't really work with loan brokers because we help people get the loans, but from what I'm aware of, loan brokers are focused on the loan.
Correct.
And because you work with a brokerage firm, generally you have direct access to the seller. So anything that the lender needs from the seller, you're able to get and collaborate with the broker to make sure that we have that in place.
Absolutely.
But then the other end of it is the things you're describing, which is part of our closing checklist process. As brokers, it's not simply the sale is done and off you go. I mean, we have a closing checklist process that guides people through all of the things they need to do that we can think of and that they can collaborate with us on to make sure that the day they close on that business, they are ready to own the business.
Absolutely.
And a lot of those details, I've seen it happen before, many, many years ago, before our process was so vetted, where a lot of times people close on the business and then they start taking care of all the things they need to do to be ready to own the business and operate, and they're not focusing on the business. And those first few weeks and month are crucial when it comes to understanding what it is you just bought.
That's correct.
And actually in the transaction I'm thinking of, I actually told this, I suggested to the buyer, I said, listen, you've got a limited period of time to work with this seller to gain all of their knowledge. And I really have seen this before. I highly recommend that you focus on capturing everything you can from them now and focus on some of the housekeeping details and the other things that you're excited about trying to do after they're gone. And unfortunately, he did not do that, and it cost him dearly as a result. That and probably some other factors, but he was not focused on getting the education about the business that he bought from the person who built it when he had access to him, and that's a crucial component. So part of the process that you help people do is make sure that by the time they close the business, all of the laundry list stuff and little detail things are taken care of so they can focus on operations and not some of the things that pertain to getting the transaction closed. Yeah, and I just say that to me would be a huge difference between somebody who's specifically focused on getting somebody a loan and somebody who's actually a coordinator like you are through the whole process.
Well, and in addition to that, as you were speaking, some of the step-by-step items that need to be taken care of. If they happen after the transaction has already closed and they're not focusing on the business, oftentimes there's, it's a simple process or a simple task that they think they need to do, and it turns into a much larger task. And, there's many times where we do have a transaction that we are working through, and it may be a third-party approval or something that seems like a minor task, and it turns into a much larger piece and can delay closing, but it's much better to know about that early on than after the transaction. And then now you have this flower, if you will, of a problem that turns into a much larger piece that now you're stressed about that and not about making money in your business that you just acquired.
Yeah, great point. In our world, people, and maybe just in general, people get so focused on the deadline.
That's
so
correct.
The contract says this is the closing date.
Yep.
And I know specifically for sellers, that's super important, but oftentimes even for buyers, because if the buyer gave notice, as an example, to their employer, and the transaction doesn't close when it's supposed to, they're spending their down payment funds for every week that thing does not close. So it gets super stressful. So I agree, certainly making sure all the details are attended to prior to closing and not focusing on closing and then we'll deal with all that stuff later is super important, even though those deadlines add stress. I know we just had a transaction that's a great example of this where, correct me if you remember differently, but it was scheduled to close about 60 days before it actually did close. And there was one particular third party that we needed approval for that put a cog in the wheel. And the thing we could not get them off center. They were going to move at their own pace, as ridiculous as that was. And it created a lot of stress for the seller. And we even got to the point that because the transaction had gone on so long and the word got out about the transaction, that the seller decided to introduce the buyer to staff long before closing, because we didn't even know when we were going to close. And then one of the issues with that was that some of the competitors started cannibalizing the staff, making offers to them to come work for them. And the employees, rightfully so, oftentimes are anxious about what the future is going to hold.
I'm sure.
And so they're thinking, the grass might be greener somewhere else and maybe want to move on. And so in that transaction, fortunately, everybody stayed put. The buyers were amazing. Seller was a great guy. They had a phenomenal relationship and they worked their way through it and it closed. But 60 days, when you're wondering, is it going to be tomorrow? Is it going to be tomorrow? That's a long time. Yeah. And for the seller in particular, he had owned this business a long, long time and emotionally was attached to the business. I mean, so it was a challenging transaction for him anyway, just because this was his family. To just have it drag on and on and on, and then all of the staff know what's going on, and it just...
Through holidays as well.
And just to add more color, because I know we could do this all day long, but just to add more color, there were two buyers. Well, one of the buyers had quit his job and was actually in the process of building a home in another town many hours away from where he worked previously, all with the expectation that this thing should be a slam dunk and will close. And this third-party provider just was going to move at their own pace.
That's correct.
Yeah.
Yep.
So those are some of the fun that come in these deals. So can you share with me, again, without names, but maybe one of the most challenging transactions and what some of the things were that showed up? And again, this isn't to scare our listeners, but it is to just hopefully give people an expectation that a business is not a house. It's not, I mean, these are people and moving, they change every single day. And so if you could share some of the details about hurdles that showed up and that with the commitment of people like you, but also buyer and seller, you were able to get to the other side of the transaction.
Sure. We have one not too terribly long ago where we had a buyer who was purchasing a franchise territory. He was the customer of the seller, and he had some other businesses of his own. He was also, in conjunction with purchasing the business, was also going to be purchasing the real estate from his landlord. So as we move forward through the transaction, everything seemed to be moving quite well. until we discovered that the seller of the real estate did not have the authority to sell the real estate on their own. And when I say at the very last minute, we're talking the week of closing. So this put a halt to the transaction, even though we had 2 sellers and 1 buyer. The seller of the business obviously had to halt his portion of the transaction. Thankfully was very gracious and understood what was going on. And in this case, it had been a member of the real estate entity that was no longer with us. And so working our way through that, which could have very well ended up in probate, we were able to find a loophole through that, a legal loophole, if you will, so that we could get that closed. Thankfully, from start to finish, we usually try to keep these transactions on task as much as possible. And you had talked about timelines. We never want to rush them, but certainly keep the pressure on throughout the process so that nothing can happen in that process. And in this case, we were able, from start to finish, 69 days to get that closed, which is a typical, usually we say 60 to 90 days from start to finish. And in that case, it felt like it took forever while we were in the trenches, but thankfully we were able to get that closed and everyone was happy.
Yeah, well, and it's interesting that snag was really driven by the escrow company, which in Arizona, which isn't the case in other states always, but in Arizona, there's an independent third-party escrow company that's their job is to close the transaction legally in according to the laws of the state.
Correct.
And so they were not willing to close without this estate issue settled. And again, we didn't. It is what it is. And you can jump up and down and scream and yell, or which I know you always do. You put your head down and start looking at what the options are, and you bring the people together to okay, here's what's going on. What can we do? And I think in that situation, the seller of the real property's attorney got involved.
That's correct.
To try to help as well. So what did that look like? Because if I remember correctly, that was still a week or so, or maybe even 2, of even with their attorney involved, trying to help facilitate a resolution that the escrow company could live with.
Well, certainly when you put humans into a project, you've got people on vacation, you've got people that aren't able to answer their phone at certain hours of the day. So that did cause some delays. But thankfully, with lots of phone calls between the attorney, the escrow officer, myself, the seller of the real estate, putting all of that together and coming up with some ideas of what we can do and really trying them all out is how we were able to get to the finish line. And thankfully, we did have all parties that had the same common goal, and that was to get to the other side of this.
Yeah. Well, and our listeners may not appreciate, but it's one thing to have a buyer and a seller.
That's correct.
It's another thing to have a buyer and a seller and a seller. And it's another thing to have a buyer and a seller and a seller and a landlord and an escrow company and an attorney.
And an attorney.
The more people you add, the more need for clear and appropriate communication and collaboration and all of that.
Absolutely.
Comes into play. So yeah, I can appreciate, and I do remember that was a difficult transaction that you got to the other side of.
Yes.
So what about one of your favorites? I mean, if you can think through, and again, without naming any, but like what makes like just an amazing deal for you that you're so proud of having been part of?
Honestly, I can't pick one. In preparation for this, I have gone through and tried to pick out one that was one of my favorites. And to be honest, they're all my favorite because there's nothing like starting from scratch with people that I don't know, buyers and sellers alike, and working our way through all of their unique circumstances, and to watch the evolution of them as, individuals turning into business owners.
Well put.
And, to have those last phone calls with them. And then, of course, at the end of the day, to call them and let them know that we funded and recorded and they are now business owners is a feeling that you can't really explain.
It's pretty amazing.
It is.
Yeah.
It is.
And I know it may be hard to believe that you have trouble picking one or that you like them all, but I But I do know these people become friends. They trust
Absolutely.
you. They put their faith in you.
Absolutely.
I also know that they send you stuff after the transaction, like pocketbooks and purses and
Flowers
and
gift cards,
ice cream and all kinds of stuff. So I know you're making an impact. Yeah. And anybody who's in need of assistance, if they went and looked at some of the referrals that you have on the WCI Business Broker website, it's very clear that you are instrumental in helping people get from point A to point B. And as an organization, we've sold the same business 4 and 5 times.
Absolutely.
And that's also an indication of people being pleased with the service that we provide and you provide in your role. So
that's correct. The advantage of that is that we usually know some of those intricacies of that business.
Great point.
And we learn each time so that it makes it easier and more streamlined each time.
Absolutely. It's funny. I was telling somebody the other day that I had sold the same business many times, and on 2 occasions back to the same person I sold it for. So the original seller ended up buying it back through us again from the person they sold it to. I mean, that's just bizarre, but it happens and it makes sense. And actually, in both of those situations, I ended up selling it for that person again to somebody else. So it is great to be so tightly knit. And
that's correct.
So one of the questions that I'd like to ask you, which I didn't give you any advance notice on, but I would like to still ask you, is that because I think it's important for our listeners that it's easy to look and hear a story or see somebody on a podcast and it seems so easy. And honestly, I also think, and I've done this myself, people beat themselves up that they can't do that or that they whatever. I've yet to meet anybody who's been successful without having somebody help them along the way. And there's, in my life, there's been lots of people who were with me when I was a very young man that gave me a little glimmer of hope or were by my side during a difficult situation or a business transaction. And so I know prior to getting into business brokerage, you were in the insurance industry for
10 years.
For 10 years, yeah. And you've been successful in everything you've done. But maybe you can just share with our listeners a little bit about, do you remember somebody from your past or that's had an impact on you that gave you a little shot in the arm to be able to get where you are today, which is successful in your career?
Absolutely. That's a great question. There's a few. Early on in my life, I did work for a dental office. And when I first started at that dental office, I had no idea what I was doing. And I had applied for a different position. And that doctor had given me some hope that I could certainly move forward in this position. And I did. And that kind of gave me a little nudge. And then when I started in the insurance industry, again, I had no intention whatsoever to really carry on in insurance. And I did have a gentleman who was my boss that had pushed me along the way, every step of the way.
Really?
And each time I thought, okay, I'm good, I'm going to coast for a while, it was another challenge, another piece of insurance to learn. So in my 10 years in insurance and corporate America, I do owe a lot to him for that push.
That's so great.
And then, when I started in real estate, when I decided to leave corporate America, and I thought real estate would be a great thing to jump into, I did that on my own for a little while. I did have a mentor, but really I just wanted something that could make a larger impact with those people and not just be one agent in, a town of 2,000 other agents. I wanted to find a niche. So the fantastic thing about that is I found WCI Business Brokers in that niche. And so I'm able to use all of my prior history, with the real estate and insurance and business ownership for this. And with your help, I've been able to do that.
Oh, that's great. Yeah. Well, it's certainly, I am still close with a gentleman. The first rental property that I purchased, which also happened to be my first home at 21 years old. And I had 2 mentors that were there with me. One to back me financially at the auction in case I got outbid, and another to coach me through what I was doing and how to investigate the property. And these were 2, they're 20 years older than me. but they joined me at that auction where there was 800 people bidding for 250 homes. And I couldn't have done it without them. I mean, they were by my side and it made a huge difference. So anyway, I appreciate you sharing those stories. And I think it's just important for all of us to know and remember, I don't know anybody who's ever done it on their own. And so I'm grateful for everything that you've brought to WCI Business Brokers and your role and for what a crucial part of that you are. If somebody's interested in, if they're in a transaction and they need assistance with financing or they want assistance with the transaction or some of the details, how do they find you?
That's a great question, Matt. Obviously, earlier on is better if they reach out, but absolutely, I am here to assist at any point in time. I'm very familiar with the process, so at any point in time, I can step in and assist. I can be reached at the office at 928-445-1144 or by email, of course, at Lindsay, that's LINDSAY, at WCIBusinessBrokers.com.
Very good. Well, thank you so much for being here. We greatly appreciate it.
Thank you.
And for our listeners, we hope you gained some valuable insights and that you can use in your future and help you succeed and avoid any stumbles along the way. That's a wrap. See you next time. And that's a wrap on today's episode. We hope you enjoyed the conversation and got some valuable insights into the world of buying and selling businesses. Want to be a guest on our show? If you have a deal that you'd like to discuss with us or a business story to share, we'd love to hear from you. Shoot us an email using the contact information below in the episode notes, and let's make this happen. Never miss an episode. Make sure you subscribe on Apple Podcasts, Spotify, or wherever you listen. And if you found today's episode helpful, please leave us a review. It helps more people like you find the show.